The Maverick Podcast. This is the story of one of the most audacious financial plays in modern history, a saga of inherited oil wealth, global panic, market manipulation, and catastrophic collapse. At the center of it all were two Texas oil heirs who tried to corner the world's silver market and nearly succeeded. The Hunt brothers, Nelson Bunker Hunt and William Herbert Hunt, weren't your average investors. Their father, H.L. Hunt, was a legendary Texas oil wildcatter who built one of the largest fortunes in the United States. By the 1960s, his net worth was estimated at over $2 billion, making him one of the richest men in the world. His empire included Hunt Oil, Placid Oil, and vast real estate holdings, and he served as the real-life inspiration for J.R. Ewing in the television series Dallas. Nelson and William Herbert inherited not only the wealth, but also the mindset. Bold, contrarian, unafraid to bet big. By the early 1970s, they were operating companies like Placid Oil and Titan Resources, deep in the world of energy and commodities. But the event that pushed them into silver came in 1973, when Libyan dictator Muammar Gaddafi nationalized their oil fields. Virtually overnight, the Hunts lost billions in assets with minimal compensation. That moment transformed them. They became deeply distrustful of governments, central banks, and fiat currency. In their eyes, only tangible assets, things you could hold in your hand, were safe from confiscation or devaluation. They turned to silver. In the 1970s, the global economy was in chaos. Inflation in the United States hit 11% in 1974 and nearly 14% by 1979. The oil shocks of 1973 and 1979 sent energy prices skyrocketing. The dollar, decoupled from gold in 1971 by Richard Nixon, was losing credibility. Fiat currency was under siege, and investors everywhere were looking for hard assets. But until December 31, 1974, it was illegal for U.S. citizens to own gold bullion, a Depression-era policy still in effect. Silver, however, was legal and accessible, and the Hunts believed it was wildly undervalued. Historically, the gold-silver ratio hovered around 15:1. In the 70s, it ballooned to 40, one or more. The Hunts suspected government manipulation and saw a once-in-a-lifetime opportunity. Their strategy wasn't subtle. Buy as much silver as possible in every form, physical bullion and futures contracts, and use leverage to maximize control. Futures contracts allowed them to put down just 5–10% of the silver's value in cash, borrowing the rest. That meant they could control enormous quantities of silver for relatively little upfront capital. Every $1 move in silver meant gains or losses of $100 million on their position. But unlike typical traders, they demanded physical delivery. Silver bars were flown, reportedly in chartered Boeing 707s, to vaults in Switzerland. At the peak, they and their associates controlled up to 195 million ounces of silver. That amounted to as much as 1/3 of all privately held silver in the world. In January 1980, silver prices went vertical. From just $6 an ounce in early 1979, silver rocketed past $50. Futures contracts peaked at $52.80 on the Chicago Board of Trade. The Hunts' position was valued between $4.50 and $10 billion. The frenzy was contagious. Small investors melted silverware. Industrial users were squeezed. Tiffany & Company took out a full-page ad in the New York Times, accusing the Hunts of unconscionable market manipulation. But behind the scenes, regulators were panicking. The Commodity Futures Trading Commission, CFTC, COMEX, and the Chicago Board of Trade feared a systemic risk. If the Hunts defaulted on their massive leveraged positions, their brokers could collapse. The financial system itself was at risk. In early January 1980, COMEX implemented Silver Rule 7, capping position sizes and restricting leverage. On January 21st, they allowed only liquidation trades, no new buying. The Chicago Exchange followed suit. Margin requirements were hiked, and banks, under pressure from the Fed, stopped lending to speculative accounts. The trap was set. Silver prices began to slide. The Hunts, still massively leveraged, were hit with escalating margin calls, tens and then hundreds of millions of dollars per day. Despite their enormous paper wealth, they lacked the liquid assets to meet the demands. It all came crashing down on March 27, 1980, a day that would be known as Silver Thursday. The Hunts defaulted on a $100 million margin call to their broker, Bache Halsey Stewart Shields. News of the default triggered widespread panic. In just 4 trading days, silver plunged from $21 to $10.80, a 50% collapse. The fear spread beyond silver. Stock markets tumbled. Commodities crashed. Wall Street braced for systemic failure. The Federal Reserve stepped in, organizing a $1.1 billion emergency loan from a consortium of banks to prevent the collapse of Bosch and stabilize the markets. The fallout was severe. The Hunt brothers' estimated losses exceeded $1.7 billion. By the end of the decade, both had filed for personal bankruptcy. Their family empire was gutted. Oil prices fell in the 1980s, compounding the damage. Their assets, Placid Oil, real estate, business stakes, were liquidated to repay debts. Legal consequences followed. In 1985, the CFTC charged the Hunts with market manipulation. A Peruvian state mining company, Minpeco, successfully sued them for $134 million in damages. In 1989, the brothers settled with the CFTC, each paying $10 million in fines and accepting a permanent ban from U.S. commodity markets. Silver Thursday left a permanent scar on financial regulation. It proved how dangerous concentrated positions and unchecked leverage could be. Today, position limits on silver futures, such as the COMEX 3000 contract spot month cap, are direct descendants of this debacle. The role of clearinghouses, margin management, and exchange oversight became central to maintaining stability. The Hunt's silver saga is a parable of ambition unchecked, of leverage misunderstood, and of a belief that wealth alone could bend markets. It's a tale of how 2 billionaires with a distrust of paper money nearly broke the very system they were trying to escape. While the tools and platforms may change, the forces of greed, fear, and overreach remain timeless. And the story of the Hunt brothers stands as a powerful reminder of what happens when a maverick play spins out of control.